Welcome to another episode of Marketing Tips for Doctors. I'm your host, Dr. Barbara Hales. Today, we have with us Alexis Gallati. She's the founder and lead tax strategist at Cerebral Tax Advisors, Cerebral Wealth Academy, and the author of the book, Advanced Tax Planning for Medical Professionals. She has over 20 years of experience in high-level strategic tax planning and multi-state tax preparation, and has trained at the highest level, holding 2 master's degrees. Alexis grew up in a family of physicians and is married to a private practice physician. That's why she understands how hard medical professionals work to get where they are, and why she provides simple and accessible tax solutions tailored to busy physicians. Welcome to the show, Alexis.
Thank you, Barbara. I'm excited to be here.
What inspired you to focus on tax planning specifically for medical professionals?
Yeah, well, as you kind of mentioned in your intro, my husband is a physician, and we met the second week of college. And when he went to medical school, I went to graduate school, and of course, his schooling, between medical school and residency is much longer than my schooling. And so when I saw the writing on the wall, he was finishing up his residency up in Rochester, New York, as a neurosurgeon. I saw, hey, we are going to be hitting a really big tax bracket. And so I wanted to know why the Warren Buffetts and the Bill Gates of the world, we're in that lower tax bracket. Like, why can't it be us? And so that's when I went out on my own after working for local and regional CPA firms for 12, 13 years. So I could really focus on the tax planning. And, since, we have this same situation as a lot of our Cerebral's clients, it was very natural for us to be working with other healthcare professionals. And so that's really where it came out of, was necessity on our part, and then me loving to teach others about how to save.
The question about the lower taxes is something I'm sure we all, wonder about. In what ways do you see physicians being different from other types of clients?
Yeah. So a lot of it has to do with mainly pay structure. I mean, depending upon if you are W-2 or if you're 1099, if you're in a group, different groups have different ways of that their employees are paid, the doctors are paid. And so having that understanding about the different types of payments that doctors have is very beneficial, because depending on what type of income you have, if it's ordinary income or if it's capital gains, maybe from like the sale of an office building, they can have different tax strategies. And so that's really important to understand, not even just how their income is being taxed, but also, the way that they work in the long hours. And so having that general knowledge, or I shouldn't say general, more specific knowledge of how a practice is run, or even just how a physician is paid, is very beneficial overall to being able to provide a pinpointed advice.
How is proactive tax planning different from what most tax professionals do?
Yeah. So most physicians, when they go to hire a tax professional or their accountant, most of those accountants are very reactive. So they're basically preparing the tax return and maybe giving you a little bit of advice after the fact. But most planning has to be proactive during the year, because a lot of the strategies that you can implement have to actually be done in the year you want it to count. So that's where Cerebral is very different, and how I built Cerebral was to be proactive. We not only prepare the tax return in the spring, we also do a mid-year tax projection around the May-June timeframe, and then we do a year-end projection around the October-November timeframe. So that allows us to continue to tweak and modify our clients' tax plans as their situation changes or tax law changes. So it affects their tax optimized throughout the year. It helps eliminate surprises. We do cash flow planning as well, like, hey, what quarterly estimates are coming down the road, or retirement payments, things like that. So, you can actually plan your cash flow, especially, for those that are trying to maybe save up for a new house, or, pay off student loans, maybe get into real estate and, start that as an alternative investment. And so being proactive obviously just comes with a bunch of benefits, not only from a financial standpoint, but just also, mental burnout standpoint as well.
What's your favorite tax strategy for medical professionals who own their private practice?
Yeah. Well, so one of my favorites is there's so many of them because they're so easy to implement, once you qualify for it and et cetera. But hiring your children, I think, is an amazing way to, if you have children, to move income from your higher tax bracket down to their potentially zero tax bracket. And that allows you to, one, save money because your business gets a deduction for their salary, but you're also able to put that money into like a Roth IRA for them, or to even go and potentially save for school as well. But one strategy that I also love as well is the health savings account. And this can actually be done by someone who has a business or doesn't have a business if they have a high deductible health insurance plan. And those I love because they're triple tax advantage. They put the money goes in tax-free, it grows tax-free, and then it comes out tax-free. And so if used for qualified medical expenses.
So if you're hiring your children, do they actually have to do something?
Oh, yes. Yep, they do. They have to have a legitimate job in the business. I'm not of the camp to hire your children as models. So the court tested age is 7. And so that's usually what I tell my clients. It's like, hey, if they do like a one-time modeling thing for like the website or something, but it's hard to justify, like a $7,000 salary, for example, if you're trying to maximize their Roth contribution for 2024, the maximum is 7,000. And so it's hard to justify that for like one picture or 2 pictures on your website. But, if you have a child that's 7 years old, they can be doing a lot of administrative tasks, going and shredding paper, stuffing envelopes, helping with filing things. So, and then as they get older, they can do even a lot more work for you. And so as long as you have clear job roles for them, you're keeping timesheets, and you treat them as employees, then it's a completely legitimate deduction and a wonderful way to build their wealth. So leaving a legacy as well as help save taxes on your part.
Gee, I never thought of having children, being paid as models for a doctor's office. That's interesting.
Yeah.
So do you also recommend that doctors, buy their building that they have their office in to have additional tax benefits?
Potentially. So it depends on the area, obviously, and whether or not you can afford the office building that you're in. So like in California, for example, that's, very expensive purchase, but there are tax benefits to it. Namely, you're able to shift income from your business and essentially being taxed at your higher tax rate over to be rental income in your buildings LLC. And then you are using the expenses of that LLC to help, including depreciation, to help offset that income that you're bringing over. So it's really about shifting the income and then using the expenses in the building LLC to maximize that savings.
There are many different models for income that doctors get. Some rely on insurance and others are concierge. Some have a concierge hybrid model. How does the tax structure work if somebody is a concierge hybrid? Is it no difference? It's just a question of the money coming in regardless of what their pay model is?
Yeah, so if this is a private practice, whether doing that concierge or the insurance, it's all the same type of income. It's ordinary income. And so it's taxed in the same manner.
Tell us an interesting or a funny story that you have regarding a doctor starting out and, trying to set up a tax structure for that person and a partner that they're taking in.
Sure. So I'm trying to think of one. A lot of times when I've had many clients actually not choose that proper structure. So, they might not even do a proper like LLC, like when they have someone coming in as a partner. And so if they are setting it up without an LLC or a PC or PLLC as well, a proper structure, they might be setting themselves up for like additional liability. And so the LLC protects, like even like when you have a partner, it helps to protect against, with the actions of the partner. And so luckily I haven't had any clients that anything bad happened to that, but we went and discussed some of the legalities of wanting to have that structure in place, so then that way from a legal standpoint they're covered, and because there's some things that you're still liable for even with malpractice insurance.
Okay, so the last part of our interview is where we ask our interviewee to give us 2 tips for our listeners that would help them, something that they could implement right away that would be helpful. Do you have some tips for our listening audience?
Yeah, definitely. So, first tip, let's say you're only W-2, and this is a very common scenario for some docs. And so, if you're only W-2, the number of strategies are a little bit less for you than if you have your own 1099 income. But you want to just make sure that you are maximizing your retirement, and that you are taking advantage of any sort of benefits that your employer provides. So maybe you have children and they do a dependent care benefit, or they do provide a high deductible plan, so you can do an HSA. Going and maximizing those benefits is super obviously beneficial. And then too, looking at more investment type strategies like real estate or oil and gas, that will be able to provide you some diversification in your portfolio as well as a tax benefit. If you have your own business, like I said, there's so many different strategies that are out there. But what you can just start implementing right away is the setup of an accountable plan. So if you have an S corporation or a C corporation, the accountable plan allows you to properly reimburse yourself for business expenses paid with personal funds. And without this document, the IRS can technically deny any of those reimbursed deductions. So if you go on to, you can just Google accountable plan template. We also provide that a template through our Cerebral Wealth Academy course as well. But those sort of things really allow you to make sure that you're keeping the IRS happy and with the documentation you need.
Well, that's one thing that we all want to do. We want to stay under the radar and keep the IRS happy.
Yes, definitely.
Okay, well, we certainly enjoyed having you here with us today, and we're going to certainly think about the tips that you have given us and, start implementing right away to make more money and not lose it.
Keep more of what you earn.
Absolutely. Well, thank you for being with us on the show today. This has
You-
been another
thank you.
episode of Marketing Tips for Doctors with your host, Dr. Barbara Hales. Till next time.